You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's that time of the week. It's Thursday. It's 3 p.m. Central, 4 p.m. Eastern. That's right. It's time for the option block. Hopefully your favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Hopefully you've listened to this. You know how to find us by now. But maybe you're saying, I've just found this for the first time, or what else do you guys have to offer? Well, the easiest place to grab all that, of course, the mothership, theoptionsinsider.com, or just search for our network, Options Insider Radio Network, on any podcast provider. You should see all of our 15 programs. Go up there. If you want to save yourself some time, just subscribe to our network feed. That gets you everything, all 15 programs. So it's a lot. Be warned, but it's a lot of good stuff, we like to think. So hopefully you will enjoy them. However you listen, we don't always ask you for this. Man, go ahead. If you like it, go ahead. Feel free to leave us a review, iTunes, TuneIn, Stitcher, wherever you like to get your podcasts of choice. We don't always ask for those, but every now and then it's kind of fun to see what you guys think. Don't ask us questions there. Some guys ask us questions in iTunes. Easier to ask us via social media, via the app, or via email, because we can actually see those in a real-time basis. Or even the live chat. If you can join us 3 p.m. Central, 4 p.m. Eastern here via Mixler, MIXLR. I know a lot of you guys like to do that as well. But if you ask questions in the iTunes reviews, it's going to take a while for us to get to them. But check us out there and subscribe and leave a review if you are so inclined. If you don't like it, well then blame the Rock Lobster and then don't leave us a review. Go over to the Option Pit and blame him. All right, speaking of the Rock Lobster, we are joined by the aforementioned Rock Lobster. It's good we get him now, listeners, because he's nice and surly, because he's working something. That's always a nice way to kick off the show. Mr. Rock Lobster, welcome back to the show, and what are you working?
I'm trying to buy some. Actually, I got fill, but all my clients got better fills than me on my SPY puts. We were buying a SPY and a VXX put pair. So, but they all got better fills. I'm sitting here trying to get fill, and I'm yakking, and you're ringing and screwing me all up. And
see, nice and surly. What did I tell you, listeners? It's always good to get him when he's working something. But that's a sign of a good mentor, a good advisor. When you're letting your clients, when you're teaching your clients, and they're getting better fills than you, then now the student has truly become the master. They're lifting
offers in my face.
They are Darth Vader to your Obi-Wan, and they are front running you, and then they will now destroy you with their lightsabers. So I'm looking forward to that imminent destruction coming soon. We are also joined a little bit closer to home by good old Uncle Mike Tosaw from RCM Walt Advisors. Uncle Mike, welcome back to the program, and hopefully all of the plumbing issues have been sorted out over there in the RCM satellite office there in St. Charles, and you're ready to go, sir.
I am ready. I have my own Darth Vader images about plumbing, but that's another story.
Yeah, we won't get into the plumbing, not the plumbing cast here on the show this week. As exciting as that would be, maybe that should be our show number 16 on the network, the plumbing cast. All things toiletry, plumbing, faucets, good stuff. I think we can get into that. But meanwhile, I think we'll get into our actual business today. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. This is indeed, as the man said, the portion of the show where we break down what's trading, what was rocking and rolling in the markets today. And an interesting day here. Like I mentioned, we are streaming this live and recording it here on Thursday, February 9th, right around 3 p.m. Central here, and a bit of an update on the old street. Most of the major indices closing up about 0.5% or a little bit better in some cases, a little bit worse in the case of the tech-heavy NASDAQ. A paltry 0.4%. Couldn't even manage to close up 0.5%. So pshaw to the old NASDAQ. Of course, all this green on the screen means VIX cash taking a bit of a break south of the 11 handle yet again, off about a half a handle, right about 1090 or so right now to end the day there. So a lot of interesting stuff. Got some names popping off after the bell as well. We'll get to those in a little bit. Some of the big news kind of hitting the street today. Of course, we saw oil kind of on a bit of an unexpected jaunt these last couple of sessions, up over about 1.5% actually, 2 straight days in a row. Unexpected drawdown there, and gasoline inventory is driving a lot of that. So people have been writing into our TWIFO show for a while. What's it going to take to budge crude and budge some crude volatility? Who knows? If we have a protracted move in one direction, and in this case up, who knows? Perhaps that will continue to do so. The calls near term have gotten a little bit of a bid out there in WTI and USO and others. So a sharp move upward would give us a little bit of a pop, even though downward is where still the meat of the vol is in the long-term puts. But a sharp spike upward could do that. So we shall continue to see out there. I know, Uncle Mike, you like to watch all things resources out here. It's not just crude, but also the shiny stuff. So what was catching your eye in today's activity, sir?
Well, we did have you're right, to reiterate what you said, we did have the 2 updates on crude, along with the energy information that came out yesterday in the early morning. I remember if you just look at a chart of XLE, for example, we actually I remember just looking at XLE early in the day yesterday, and it was not a pretty sight. If you look at XLE as we started off, we were actually, XLE yesterday, opened around 71.5, actually got as low as 70.65. But with that, once the news came out right around 9 o'clock Chicago time, XLE has just been on fire basically, and has not been holding anything back. So it's been a good little run for XLE since the announcements came out yesterday. Also, some other things that were catching my eye in regard to the shiny stuff, our beloved silver, down a little bit, but not much. It's still been doing really well over the course of the last couple of weeks. We are at a point now to where I might have some more information in the coming episodes for the strategy block of what some things I might do for that silver collar, because we're starting to plateau a little bit, and I'm seeing a few things in terms of rolling up puts that I think might be pretty attractive at this point. At this stage, when we're up, this is a point to where it might not be a bad idea to buy a little bit of premium, because I'd much rather take advantage of adding some protection and take the gamble that we might not need it, as opposed to being too late and needing it and really wanting it and having to pay too much for it. Not a spot with which anybody wants to be. Other thing that caught my eye today is that the financials did rally back yesterday. On looking at XLF as an example, had a down day. We were actually as low as 23.28, but today it's just been off to the races since the open, closing today on the upper 23 level, 23.75. So that's another thing with which I've noticed, and looks like bonds are coming down a little bit again. If you look at a chart of TLT, it's also had a down day on the day today, but overall, where TLT is, we're at kind of we've held these levels. In that in December, TLT was down in the 116.80 was the low. And we're still above 120, but where we're going to have to get to if you're looking for a rally in bonds in some way, and I'm really not, quite frankly, in the minimal bond holdings with which we do have, I'm more than happy with where they are from a pricing standpoint, but we still need to kind of break through that 122, kind of the 123 mark in TLT is what I'd like to see to if you're looking for bonds to rally in some way, because ever since the election, it's actually been quite a down time for bonds. But if we do start rallying in some way with the bonds, which anything can happen, I think that's the next level with which we need to get to. So that is what's been lighting up the tape out here in the satellite RCM office, if that's what you want to call it.
And aside from getting front run by your students there, Mr. Rock Lobster, what was catching your eye in today's trading activity? I'm not going to let this one go. This is too good, too juicy, too meaty, sir.
Damn students. I'm looking at them like my offers are getting lifted in my face. It's so disheartening, but it's good.
They're like,
anyway.
what are you going to trade there, Andrew? Oh, just keep talking and tell me again what strikes. Oh yeah, let me just wait. I'm just typing very quickly in the background, taking notes. That's what I'm doing. And somehow someone got executed in front of me. How did that happen?
It's miraculous how that happened.
I like it. Nice dubious bunch lurking in that chat room. I salute them. I take my hat off to them if I was wearing one.
Oh yeah, there can be a ruthless streak there for sure. You know what? We closed 2,300 for the first time ever in SPX. That's not newsworthy. All-time highs in the S&P 500 close.
I was letting Uncle Mike. I thought he was going to run with it with his whole, never been a better time to sell, but he didn't hit it.
I'm saving it. I'm going to save it for one day when you guys least expect it. I've become quite the showman over 500 episodes, so I am saving it for a day that no one expects it. I'm not going to pimp out my trademark line anymore on just any all-time high, because we have all-time highs all the time now. It needs to be a day worthy of the saying, in my opinion. I don't think today's quite worthy.
Wow, that is hugely impressive. He's just not going to pimp out his trademark tagline.
He doesn't trot it out just for anybody. Just on
high.
any old day. No, sir. It's got to be momentous. It's got to be worthy of the occasion.
What I found, I think this is the first time I can remember, and I really can't, probably since trading the SPX, and that's dating myself, by the way. That's like 21 years ago. I'm seeing the seven handle almost 1 month out in the SPX for At the Money Ball. That is pretty freaking low. That's all I got to say. The idea was for our class, for our students, we do kind of a vol pair. We buy VXX puts and we buy some SPY puts. We altered it a little bit just because vol was so low. Normally I don't buy the SPY puts this close in, but I said, what the heck? It's because you can buy the 230 puts for 2 weeks out for $1, and you hedge with some VXX. So VXX puts. So I thought, wow, oh my gosh, I 230 puts for $1. Well, by the time I got filled, they were $1.14. But anyway, just very, very, very low volatility. That's what else can you say? It's super low. The market has no fear, and why should it? Because all we do is go up, right? All we do is grind up a little bit every day. Whatever, I think the last episode, like, this is no 9-vol president. Yeah, no, it's a 7-vol president. Because that's what it is.
Single digits for the entirety of the Trump first administration. How crazy would that be? The quietest period in the history of any presidency.
We'll be trading 3,000. 3 years at this rate. What do you do, right? So I think, you go where kind of the vol edge is. It's still in the vol products a little bit. Because the futures have to be I still actually think from past history, they've actually had more of a premium in them than they do right now. So I didn't load the boat on this particular trade. But still, it's very, very inexpensive vol, and probably these puts will go out worthless. The SPY puts will go out worthless, but then my VXX puts will be worth some money. So it's one of the two. But I mean, it's hard to buy a 2 week out put that is literally, it's only 0.25% out of the money for $1. That is low. There's no other way to. It's probably as low as it's traded in 5 years, 10 years. I don't know. Maybe that's something for Russell, but when I look at that, I go, that is just not. It's just cheap. So I look for ways to buy the cheap stuff. Yeah, it's 7.38 vol for a quarter point out of the money put. And it probably will go out. It'll probably go out worthless. But at the same time, it doesn't take a lot of work for a 7% put to reflate to 10 or 11%. And then that put will be worth a lot of money if we actually move a little bit. The straddle value at the 230 to the Feb 20, this is 2 weeks away, is 1%. Right? You can buy 2 weeks of movement for 1% of the value of the index. That is
sold, as Don Schlesinger would say, or perhaps not sold in the words of Don Schlesinger.
I think even Don would have a hard time with the red side of his ticket on this one. I don't know.
Yeah. He might have to sit on his hands. He might have to sit on his hands.
I want him to send a note in. And I fully understand the realized vol is 5%. It is cheap. What's funny is realized vol on the Russell is like 15% or 12%. So you definitely got some things moving in two different places. I know the Russell has more banks. Yeah. 20-day vol in the Russell is 14.8%. In the SPY, it's only 6%. And I don't think, Bloomberg put something clever out that, there's never been such a dispersion in the volatility between, Russell and SPX. Yeah, well, there's never been a dispersion in the realized vol like this. They might as well be, one is on Mars and one is on Venus as far as the way these products are trading. So, I'm an old school guy. When vol gets cheap, I buy it. And that's, and I was trying to find clever ways to do it. Most of the stuff, I got to peel off a couple of long things today, but other than that, it's just kind of dopey trading. You just buy some juice long term and you watch things go up, and that's what the heck else you're going to do. It just is not a great environment to sell volatility. So, I just don't do it. But that's what we got. That's the market.
But our listeners want to know, are you getting your juice for free? Because that's the only way you buy your juice, I know.
Well, I will get it for free if VXX continues to decline. So I could get it for a rapid discount.
Are you predicting the predictably crappy nature of VXX? Is that what you're telling me? Are you attempting to predict it?
If it just does what it's supposed to do. My pair trade really does poorly if the index goes straight up and vol goes straight up. Which, we're in the Twitter presidency. Anything can happen. I think part of the rally today was, there's going to be big tax news within 3 weeks, and I think that got everybody excited. So, we'll see what happens to all of this stuff. But that's what I'm seeing. You got all-time highs, but I think you could even at all-time highs and low vol, you can still go broke buying puts, but. That's why I try to find a way to hedge them a little bit, and we'll see what happens.
It's a long, slow death when you're buying premium, but it still can be a death at the end of the day. Let's look ahead, or look back. Actually, starting even though we've been going for a little bit, a lot of names are popping off this week. We still are in the height of earnings season here. Looking back a little bit, Disney was a big one. I know a lot of you guys were interested in earlier this week, popping off on Tuesday. So in between our shows, how rude of them to do such a thing. And they were looking all right, but even compared, I think where they really got hurt, they had some strength in the parks, but they had a rough year compared to last year, of course, which had the big Star Wars Force Awakens coming out in Q4, and that was a lot of toy sales going on with that. Not so much with Rogue One, a little bit of a different movie. I don't think the response was as strong. Certainly not the toy area was not as strong. So we saw Disney closing around 109. They were pricing in about $3.50 for a straddle, so a little over 3%. They opened right around 109.5. They did trade up to about 2.5%, almost 11.50 or so, before trending back down to 109, kind of staying right in that range, so kind of unched coming out of earnings. So we did have a little bit of a range, though, not enough to overcome that straddle, but at least enough to make at least a college try of it before it gave up with a resounding whimper. So Disney not exactly budging the needle again. Kind of going back to our earnings straddle underperformance theme for the season. Twitter, another big one coming out. This one before the bell today. Not a lot of love for them. They reported their slowest revenue growth since going public in 2013, so that's not exactly going to farewell with the name. They would come out before the bell today. They closed yesterday about 18 3/4 or so. They were pricing a little over $2, about 2.10, so a little over 11%. They opened up down about 9%, about $1.72. They closed off nearly 12%. So one of the few names here, about a little shy of 16.5. So one of the few names actually outperforming from an earnings volatility perspective. I'm not talking upside or downside. I'm just talking net move as it compares to their straddle. Very basic analysis, listeners. So don't get all upset. Hey, he said outperform, but it dropped. That's not what we're talking about. We're talking about straddles and volatility here, which is a little bit of a different beast. And of course, after the bell, we have Activision popping off. Some of you guys are already asking about this. The name Travis Scudder. I'll let you jump in early here in the chat. He wants to know if there's any trading today in Activision. If you listen to the show for any length of time, Activision was one of my favorites for a while, bit of a darling. I liked it more when it was back in the 14 to 20 or so range. That's when it was a much more reliable premium sale than it is right now. I know hovering today, closing a little bit shy of $40, 39 3/4 or so, and they were pricing in about $3, so about 7.5%. And lo and behold, looks like Activision, at least in the first blush, seems to be one of the few names that is bucking the trend, up about 9% here in the after hours, trading at around 43.40 or so. So a nice little pop. This is also a name that did a decent amount of paper here today. Let's see, pull up the stats here for good old Travis. They average about 17,000 contracts, doing 114,000 today. So size pop, actually puts out numbering calls, which is kind of interesting, about 1.3 to 1 out there. We'll keep an eye on Activision, but it seems like this is one of the few names that's going to outperform. Again, one of the reasons why they're not perhaps as reliable of a premium right as they used to be. They used to capture decent premiums, but never really move a lot, which was kind of like the holy grail of any premium writing strategy. And then so far, they're performing the opposite way, which is a little interesting, perhaps a little terrifying for all the premium sellers out there. And then, of course, the Rock Lobster's favorite. Can't leave this one off the list. Good old Zinga. Oh, how the mighty have fallen, trading $2.50 to close here today. The name's averaging about 100 contracts a day, doing 6,300 today. So a little bit more. Of course, if the Viceroy were here, he would say the stock is indeed an option in and of itself. Anything shy of $5, he was not a fan of trading options on. So all these people trading options on Zinga, he poo-poos you all. But that said, they were pricing in about 18 cents, about 7% move here. I don't have them pull, so we can pull them up here in the after hours to get this breaking news here on all things Zinga. Oh, they're off a penny. So there we go. Good old Zinga rocking and rolling. I don't know, Mr. Rock Lobster. Any of those names, Twitter probably was, any of the others, Disney earlier this week, or your old favorite Zinga, any of these names lighting it up in the pitch chat, and are you working any Zinga puts for old time's sake?
The Zinga itself is, what's funny is like every quarter I watch the cash and its book value go down a little bit. I think it's just worth what the building they bought in San Francisco. That might have been their best.
Probably
investment.
A bargain for real estate in San Francisco at that point.
I think they put that building, I think, right, isn't it in the Mission, or is it in what used to be kind of the end of the Tenderloin? And I'm sure it's worth a gajillion dollars by now. Zinga, after they decided not to have real paying poker, I kind of lost interest in that name. So that is, but Twitter, thankfully, this time I've learned my lesson with Twitter, and when we had that couple point rally, I got rid of all my deltas on the rally, so that was nice. But the as far as, those, I don't do anything in Activision anymore. It looks like there was call spread buyers, 42, 45, and they sold 34 puts agained. So somebody thought.
How's that working out for you?
Pretty damn good. They only paid what, 50? Yeah, it looks like they only paid 50 net, 50 maybe 60 cents for that. So I think they're going to be making some dollars.
Yeah, that might work out all right. Lo and behold, our surrogate getting long, bullish, not really risk averse, more of a vertical finance by puts, but still, lo and behold, that strategy could work if the stock pops 9%.
It could be a good thing.
Funny how that works.
I think, so, that was my story today with what we had going on.
Uncle Mike, any of these catching your eye here before we roll on into the odd block? Maybe a little Activision love, maybe a little Twitter love, maybe a little Diz in the old strategic night. What's catching your eye out here?
Nothing from an option standpoint. I am disappointed that Andrew doesn't have anything more to say on Zinga, though.
Yeah, those were the good old days of the odd block when he was, or I should say the option block, when he was rocking and rolling all things Zinga out here. Not so much. No fun anymore out there in Rock Lobster land. You're nice and boring getting front run by your students. All right, let's keep on rolling, though. Right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. It's time for that funky, that freaky, that weird, that wild, that whimsical part of the show called the Odd Block, where we break down some of the interesting paper that's lighting up our collective tapes. Going to kick things off with, I believe, a newcomer to the Odd Block. And all the time we've been doing this show, I don't recall talking about this name. Maybe they snuck in there once or twice back in the dark ages of the show, but it has been some time. This is good old Foot Locker, ticker symbol FL. Closing today, about 71 and a quarter, up about a little over 2%, or about $1.60 on the day here. This is the name that does about 2,000 contracts, doing about 3x that, about a little 6,000 and change here today. So a nice little pop here for good old Foot Locker. About 4.5, almost 4.5 to 1 calls over puts. Give you some inkling of what caught our eye out here. And it was a pretty straightforward trade. Someone coming out and just looks like just lighting up the March 72 halves. So these are a little more than $1 out of the money calls. Hitting them off, starting off about 2,400 for $2.30. As the day went on, a total of about 4,000. So we said the name did about 6,500, about 4,000 of that coming in this one trade, about 2/3 here. The second block coming in, probably prices around that similar level. Again, total of about 4,000. The first kind going up one block over there on the ISE. Second chunk traded up down to about 225 for the second kind there. So a little bit of splits there coming in on this trade. Again, looks like someone overriding here. No open interest to speak of on this strike. There are 3,200 open on the 70s, but no real open interest to speak of on the 72 halves. So this has all the hallmarks here. We'll see if the Rock Lobster agrees, or if we get into a nice tete-a-tete on this issue. But looks like this has all the hallmarks of a little overwriting action here. Looking back at the year that was here for Foot Locker, they had a nice little peak back in mid-December or so, pushing almost $80, about $79 and change out there. Then kind of coming off that peak ever since. Like I said, hitting a low of about the mid-60s not that long ago, end of January, a few weeks ago. So this thing has had a bit of a range of late, about a 14-handle range. Our friend here obviously thinking that strike here, the 72 halves, not bad. A little bit of drawing the line in the sand here for the next month or so. And if he gets called away, he's happy with what he's got here. Not a bad, interesting little trade, interesting strike selection. Mr. Rock Lobster, kick us off here. What say you? Are you buying the overrider, or you think this is something else, something exotic? What's your call here in Foot Locker?
I mean, I would love to take some sort of umbrage with you on this, but I have to say, it looks like somebody's selling themselves some calls into the earnings. That's what the flavor of this was. You know what's funny about Foot Locker? Aren't they kind of a brick and mortar? They sell shoes, something that Amazon and Zappos and everybody else should be selling, and they kind of keep chugging along. I don't know, I don't know why they would survive. I guess for the same reason GameStop is, because what they sell vintage Nikes or something. I don't know. You would think they would be they'd get pounded, but they're not. They're actually relatively wise, it looks like they're kind of thriving. I
think it's one of those reliable names, kind of like, you walk into any mall in the country, you have a reasonable certainty, like an 80 Delta, you're going to see a Foot Locker there. It's kind of like that, like the Annie's Pretzels. You kind of just, it's a reliable, it's literally an old shoe, and it's comfortable. You can go there, buy your shoes, try them on. The guy's got the ref's outfit on, and apparently it works. It's providing a niche that Zappos cannot fill. You can't get a guy with a ref's jersey bringing your shoes to your door from Zappos.
I guess not. I don't know what has made, let's say, Foot Locker thrive when some of the other retailers have had so much trouble competing against, online. But I think maybe people just like to go in and try on shoes. Maybe that's they're like, okay, I don't like that style, doesn't fit. I want to try my shoe on, whatever. So it looks like I would say this just has all the flavor of a buy writing, crushing the strike type of trade. I did not see any stock go up with it, so they either have an existing position or they're just going to short Foot Locker into, or it's just a short into the earnings, one of the two. But kind of juicy premium for Foot Locker, so that's why they're selling it.
Yeah, pretty juicy. Our friend here obviously taking advantage of a little bit of whipsawing action of late to get a little bit of extra juice for his call over. If he gets called away, so be it. He's taking a little bit extra juice to do just that. Can't say I blame him. Selling some juice in the old Ref Jersey company. Moving on to a frequent offender, from a rare offender to a frequent offender on the odd block. This is our old friend Chesapeake, ticker symbol CHK. Rearing their ugly head yet again here on the old odd block, closing $6.31, up about 20 cents or about a little over 3% on the day. It's not a bad day here for Chesapeake. They average about 52,000 contracts a day. Today, doing some size, doing about 130,000, about 15-1 calls over puts. That should give you some inkling of where we found our next victim here in the old odd block. And it was indeed a pretty sizable, looks like a call roll here, listeners. It was straight up Feb Ape 8 call spread going up to start the day 40,000 times. Paper buying Feb, selling April, collecting a whopping 12 cents to do just that. As the day went on, a total of 48,000 going up on the Feb, and let's just scroll a little bit. Here we go, about 49,000 on the April. Only 26,000 contracts open on the April, so clearly opening where there's about 60,000 and change open on the Feb, so pretty clearly closing here. So up on the SIBO mark spread, that's a long way to go and a lot of contracts to sling Mr. Rock Lobster to pick up a whopping 12 cents. This kind of goes back to that narrative we've been saying before about people are selling their souls these days for any yield they can get. If someone says all the way out to April for 12 cents, done. Clearly, that's what he's thinking here. Of course, it is a $6 name, so we have to keep that in perspective. But still, I always get a little bit of the hairs in the back of my neck start sticking up when I see people rolling all that way out just for a dime, or in this case 12 cents. Looking back at the year that was here in Chesapeake, it's been a frequent offender, so it's kind of been all over the place. Hit its dearth, as you probably could expect, back mid-February. $1.60, actually $1.78 was their lowest. $1.53 actually, so $1.50. So what a wild ride it's been. It spiked all the way up to nearly $8, actually a little over $8 back in middle of December. Now back towards the middle upper portion of that band, 631 here. And our friend here obviously decided, $8. Looking at this chart, hard to argue with that strike selection, at least if you may maybe take a little bit of issue with that yield. I don't know, Mr. Rock Lobster, what do you think of this? If one of your students, one of your mentees came to you with this and said, I'm going to roll all the way out to April, and I'm going to do it for 12 cents. What would your response be, sir, regardless of underlying and other pertinent information?
That's a lot. That's giving away all the upside for not a lot of money.
Yes, you might be inclined to say such a thing. Yes.
What is it? 40. So maybe it's Carl Icahn, right? 40. Let's see, 400. That's what? 4 million shares. 50,000 contracts is 5 million shares. So maybe he needs gas money for his jet. Maybe
like 12 cents. Get that. I need to fill up. Get it right now.
Well, I guess he's like, I guess he can go one direction somewhere. I guess I don't know. But yes, it's you almost get 2% yield till April. So, woohoo! I highlight that stuff for people so they go, why? They look at all this volume and they go, they got to be, but no, I think they're closing them. They closed out their shorts for a penny, which has all the hallmark of a roll. When you close a short, normally they just don't want that. They can't have that extra risk. So we're down to 2% yield for 2 months.
That's our single-digit VIX presidency right there coming. That's it in action. You're seeing it in action right there. 12 cents for 3+ months of action. That's or 2+. That's still scary. I mean, granted, if it goes all the way up there, this is clearly an underlying holder, probably rolling the calls against it. He'll get some nice appreciation. So he'll probably be happy. I know before you ride in with all that. I know. Just on the straight-up options end of it, not perhaps the trade you want to celebrate. Even though we can see perhaps some of the motivation behind it. But if you do this in the Rock Lobster chat room, be warned, he will come at you. Maybe he'll front run you to return the favor for you out there. All right, moving on to our final name, still in the brick and mortar sporting realm. This one, Dick's. If you've been in any big city, we see this in Chicago. It's probably everywhere else too. Everywhere there's an open bid of real estate these days, there is a Dick's Sporting Goods. Is that and Mattress Firm are the two things that are pretty much everywhere, at least in Chicago, and I'm sure around the country as well. Dick's, ticker symbol DKS, closing $53.17. Easy for me to say. Up about $1 or about 2% on the day. It's the name that does 4,600 or so contracts, doing about 12,000 today, so over 2x. Pretty good pop today, about 2.5 to 1 calls over puts, and that's pretty much where we saw the action, listeners. It was in the calls, it was in the March doubles. If someone clearly is following maybe the old Peter Lynch playbook of drive around, sit in the parking lot of the store, you want to trade, someone may be doing that with Dick's and deciding they like what they see, because they were gobbling up quite a few of these March doubles to the tune of 5,000 to start up the day on one block over there on the Amex, paying $2. As the day went on, looks like another 1,000 and change, going up a total a little over 6,000 on the day here. The latter kind, probably on similar prices. They paid all the way up to $215 for that latter chunk, so paying up a little bit to get that last little bit in here. This is all on 4,000 contracts open interest, so clearly this is opening paper here. And again, looking back at the year that was, it's been an interesting ride here for Dick's. They kind of kicked off the rally hard back in June, where they were trading around $41, and they spiked all the way to September up to about 61. So a nice rally out there, nearly 50% rally out there in Dick's, and they kind of vacillated around for a while, and then kind of trending lower, and right now where they are, 53. Our friend here obviously thinking this sell-off is overdone. He says there's a Dick's everywhere, on every corner, for God's sakes. I need to buy some calls. This thing's going north of 55, and it's doing it in a hurry. Mr. Rock Lobster, take us home here. What do you think about our friend loving himself some Dick's? Clearly, in-person brick-and-mortar sporting apparel retailing is the place to be, at least judging by our odd block today, which is admittedly a limited sample size, but still interesting nonetheless.
Exactly. And they're not. I like the reason why I like this trade. As far as kind of more clever, they're buying earnings premium. Looks like they have kind of around a March cycle, so you're not going to get a whole lot of decay in the calls, almost none. So they want to get long. Although today is not, it kind of paid up for them and not much happened. But they're looking for a bit of a home run. I guess again, this is another part of the market that I thought that would be destroyed by, there's Hockey Monkey and Goldie Monkey and all those other, you can buy a Nike sweatsuit from anybody, for crying out loud, online. Yet Dick's, somehow they keep powering it out. So maybe this is because they have so much stuff in one store. That's the one store, actually, we have one of those in Maine. It's rare to have any kind of big box store.
There is another store. There's another store outside of LL Bean in Maine. Wow.
There is, although the Dick's is not super close to the LL Bean. It's sort of in another town. However, because LL Bean has most of this stuff. However, there you go. You can't really buy sporting goods at LL Bean, though. But somebody wants these calls, and they took them in big chunks, and it's a little bullish. So you got kind of the rider and Foot Locker, and you got, I just want to buy some calls in Dick's. So there you go. I think we'll just have to rename this the Sporting Block.
Yeah, clearly loving some sporting block, because we got people feeling some love out there. We'll keep an eye on these, see if our friend's love is merited, and also if our friend is going to regret rolling all the way out to April for just the 12 cents. As we keep on rolling, it's Thursday. It means it's time for Uncle Mike to take the reins with the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. That music means it's Thursday. It's time for Uncle Mike to come on down from the mountain, stone tablet and smoking jacket, bubble pipe, of course, in hand, to dispense some options, wit, and or wisdom. Uncle Mike, I didn't have time really to check in with my minions. They were rampaging, running around in their little area of the studio here. But I heard something yelling, something about puts, like put something back. So I'm just going to assume they were talking about put spreads. And they were running so fast, I got to think maybe they were talking about doing it quickly. So I don't know. That was my cursory examination of them. I only had a few seconds, so maybe I'm completely off base. But are they right today? Have they earned their jams and jellies? What are you up to today in the strategy block, sir?
Well, they definitely earned their keep. It seems like they just struggle with communication. They get the right message from me, but there's kind of a disconnect between what they say to you. But you can usually decipher it from what they give you, which is a good thing.
Well, I'm trying. All that jam and jelly I've eaten myself has allowed me to become a little bit more fluent in their nonsensical language. So I guess they've earned their food. I'll go feed them, sir, while you regale us with some put spreads as quick hedges, sir. Have at it.
Absolutely. Okay, I want to go over a trade I made recently, and that for some of our clients, excuse me, XLE is a long-term holding, and so another one that we have as a longer-term holding is Chevron. And so we felt that Chevron had a nice little run recently. If you look at a chart of Chevron over the course of the recent weeks, it's done fairly well, and this was going into January. So we put this trade on January 20th. And just if you look at Chevron from late October to January, Chevron has gone from 100, roughly 100 till the day that we actually put this trade on to about 115. It's had a nice little run. So we wanted to hedge this a little bit, not necessarily. We're in a position to where we're like, well, we're still bullish on the stock. We definitely don't want to sell the stock to get rid of it, but don't really want to buy a put either because we think that might be a little bit expensive. So what we actually did with real money was we actually bought a put spread as a means of hedging Chevron. We went out 1 month. We did the February put spread, and we bought the 115 put for February. Purchase price with which we bought it for was $251. Sold the 110 put in February for 85 cents. So we're looking at $1.66 for the cost of a hedge. So we're risking $1.66 to potentially have the maximum profit on that be $5. So what we ended up doing with that is, even if Chevron were to continue to go up and up and up, and we just totally wasted money on this hedge, I'd have been very happy with that, quite frankly, because we're obviously making money overall. However, Chevron did end up pulling back a little bit. So what we ended up doing is, and the way with which I traded this was that I put in a good till canceled order to just sell this at $4. Now, we got filled the other day, and it was a beneficial hedge to the downside. Now, obviously, I'm not trying to do this as a bragging point because of the fact that this is the stock taking a pullback, and I'm not trying to brag against a stock going against us, even if it is for a short term. But what I want to point out is that if you are in a position to where you're a little bit concerned for the near term on a stock that you're holding for the long term, there's choices in that you don't have to necessarily just buy a put. You don't have to put in some insanely tight stop loss on it to get stopped out of it and then hopefully get back in and try and play that game. What I want to point out today is if you can do a put spread, it's one where it's not totally time decay neutral, although the spread does make it does take a lot of the bite of theta off of it. And the same with volatility. If volatility were to go way higher, then we could have maybe looked to buy to cover the short leg of the put spread, and then maybe kept the long leg on. I mean, there's a lot of things with which we could do with it. So what I want to emphasize for today, for the strategy, would be to buy a put spread, perhaps, at least investigate doing it as a short-term hedge. And when doing that, understand that if you don't feel that it's likely that in this case Chevron's going to go to zero, because if you're that bearish on it, just get out of the stock. But if you're concerned about a near-term pullback and you're willing to kind of give up a little bit of the doomsday hedge, put spreads can be a wonderful thing, and this was an example of it. And that is the strategy block for this Thursday.
We need to get a little one to grow on music. Do, 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 do for the Uncle Mike end of the strategy block. There we go. I just stepped all over NBC's licenses. Their lawyers will be contacting me forthwith. Let's keep going. Let's get out of this segment before they get us listeners. Right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the man said, this is the portion of the show where you guys get to take the reins. I'm getting distracted by tweets, I'm sorry. Get to take the reins here with your questions, your comments, your fellow, from you as well, from your fellow Options Insider Radio listeners. Kick things off here with our question of the week. We started this on Monday right before the show, and we were surprised at how much love the monthlies and the longer than 1 month was getting on our poll. Let me just refresh your memories. We asked you guys, with so many different options, expiration cycles available, you know, weekly, monthly, etc., which duration do you prefer? And we gave you the choices of longer than 1 month, monthly, weekly, or daily/intraday. You guys weighed in last time. I told you monthly was winning, and it was a combined with monthly and longer than a month. It actually was about 80% of the overall respondents were choosing those. So clearly 80% of our respondents going a month or longer out there, which was kind of interesting. Do you guys think that's still the case, or have the numbers changed significantly since the last time we gathered here together? Let's start with you. I'll start with you, Mr. Rock Lops, to give you a break, Uncle Mike. What do you think is happening in our numbers since the last time we spoke?
I'm still trying to get over our art block because it's making me laugh. I don't think anything's changed because if that was the first blush from retail, I'm going to say they're sticking to it. They just, you know what? And one thing we're learning is just there is those people like to just write calls against stock. That's the number one strategy. So I'm not going to change, even though, I trade a lot more weeklies than everything else, although now I'm going a much longer term for stuff. But I'm just going to stick with it. I'm going to stick with those monthlies. They like them monthlies.
They do. Uncle Mike, are you sticking as well, or are you going to change your tune, sir?
I'm going to change. I think they like weeklies now.
Oh, going weekly, huh? Well, I kind of was expecting weeklies to have more love. They did get a little bit more love, but the numbers are still surprisingly skewed. And last time we checked in, 50% of respondents said monthly. Now it's down to 40, so down about 10%. But still the number one with the bullet here, 40% saying monthly. Weekly is coming up, though. They're now tied with longer than a month, both of them at 28%, and only an anemic 4% of you saying daily or intraday. Some people chiming in with their comments as well. Mark Brandt, frequent listener, says weeklies are used intra-month as well, perhaps more than for a week or less. That is true. That is true. There are different use cases. There are a myriad of use cases you can use these options for that have nothing to do with their duration or a little bit beyond it. Kind of hard to convey that level of nuance in a four-choice Twitter poll, but I see where you're coming from. A lot of people hitting similar notes to you in some of the comments. So yes, if you trade a strip, let's say, of weeklies, but you do it 3 weeks versus 1 week, I could see why. Where am I? What am I trading? But you're still trading the weekly. So for the purposes of our poll, you would answer thusly. So if you haven't done so already, surf on over to @options on Twitter. Let your voice be heard. If you are taking umbrage like Uncle Mike is that the weeklies aren't getting more love, well, have at it. Give them your vote. All right, next up we have Edward Hughes, something along those lines. He was chiming in again from last time. He wanted to know what we think about Chipotle, CMG. That's all he wants to know. Just what we think in general. So do you like their burritos? Do you like the new chorizo? Pretty delicious they have over there. What's your feel of the menu? No, he honestly wants us to know what we thought about their trading. We kind of analyzed them a bit earlier when their earnings came out on the 3rd. They moved a little bit, but they were one of the few that was kind of flirting with outperforming their straddle. But net at the end of the day, this season a handful of names aside, has kind of been just underwhelming from an earnings straddle perspective. So this of course will be the season that everyone gets lured to the dark side of selling premium. Then of course next cycle everyone will blow the doors off and they'll all get blown out. So that's kind of how it works. I think we were debating this on VolViews once. I think it was Russell who was saying a lot of the preponderance of the data he's seen that neither side really outperforms enough to justify going either direction. It seems like if you lean either way, in the end it'll come your way, but it's enough going against you as well to make it not worth your while. So endless debate. But Chipotle, one of my old favorites, the former stealth Apple, not so stealthy anymore. The burritos and botulism has dogged their heels for quite some time, and trading today, closing 415.31. Having a good day today, up about 3%. So maybe the botulism scares are behind them after a tumultuous period. And they were not a bad day from an options perspective too, doing not quite 2x, but about 30,000 contracts, and they're averaging about 18,000, about 1.5 to 1 calls over puts. I don't know, Mr. Rock Lobster, maybe we'll start with you, because I'm sure some of your frequent offenders and front runners in the chat room have spent some time looking at Chipotle. Any of them interested in Chipotle? Are they slinging it these days, or is it a little bit too hot and heavy even for them?
We stopped trading it a little bit. It was when it was kind of moving around, it was more interesting. It seems like it's stuck in this, bad. It's like it's still suffering from all that E. coli news and everything else. And I mean, it was so. Plus that really smart guy, what's his name? The guy from Pershing Square bought a bunch of it and it hasn't moved since. So I don't know, maybe after that Valent, maybe he doesn't have the golden touch anymore. But anyway, it was an interesting stock. It's one of those, it's a big name that is just kind of stuck between 380 and 420, and it just keeps kind of, there's bad news, it goes to 380, and then somebody upgrades it and it goes to 420, and it just hasn't done a whole bunch in a while. So I don't know what's going to make it pick up the growth again, but every once in a while I think it's good to kind of trade in that range. The options don't set up too bad for that sometimes, but other than that, it's and I like stocks that move, and that one just orbits, so it does not get me excited.
Yeah, that's one of the few names that if you were patient a little bit this cycle, they were pricing in about $20 going into earnings, about 5%. And they closed at around 424, and they did sell off, not that same day, but they sold off the next day. Got about 400, so close to it, and then the next day down to about 395 or so. So if you were patient towards the end of that day, beginning of the next day, you got your range. So that was one of the few names we can even say that for this cycle. So maybe that is worthy of consideration for Chipotle, but you're right, it's not really the high flyer it once was back in the when they were tied with Apple and neck and neck and tons of vol, tons of movement. And then the botulism just wrung all the vol out of his name, as well as a lot of the share price. Mr. Rock Lobster, Mr. Uncle Mike, anything to say on Chipotle before we move on, sir?
Real quick, I am the burrito connoisseur of this group. They are the third place burrito place to eat, in my opinion, in America. One being Burrito Loco in Aurora and several other locations. Two being Jalapeno Grill in St. Charles. But with that, I want to say I think that you're right. It's come down a bunch. And I still don't think I'd be a buyer of it at this level. I think it's just kind of at a lower level. In terms of the movement of it, it's not in an uptrend right now, so it's not something with which I would look at this point. I'd like to see it level out a little bit more before I would consider doing this with one of my boring investments.
I don't know, up 3% today, so maybe that's the beginning of an uptrend. We shall see. I don't know, chain burritos? I'm okay with Chipotle as my chain burritos. I like them better than Qdoba. I don't know about your little local stores there. I'll have to go sample them myself. But for chain burritos, I think I'll give Chipotle the nod. I kind of like them, all right? And with that, we'll keep on rolling with that bit of endorsement to this segment brought to you by Chipotle. Let's keep on rolling into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, let's check back in with some of our names from the top of the show here. We were saying Activision looked like they were bringing the fire one of the few names to bring the heat to this earnings cycle. That continues to be the case. You'll recall they were pricing in, about, easy for me to find, here we go, about 7.5%, about $3 and up. About 9.5% here in the after hours, so trading right around 43.5. They closed 39.5, so up about $4 here. So exceeding their straddles. Chipotle and now Activision. Who knows? Perhaps setting the tone here for the rest of the cycle, even though it's a little bit too little, too late. Down 12 cents, or about 5% for your old friend there, Zinga, Mr. Rock Lobster. So who knows? Perhaps the vol is back in Zinga, or perhaps the name is plummeting to its doom. Who knows? That said, kind of coming to the end of the week here. It's an interesting time. We were joking earlier about is Trump perhaps about to oversee a single-digit VIX presidency. If that's the case, it'll be an interesting time for options traders. We may be looking back wistfully on those great days when we used to get paid 12 cents to roll all the way out to April, as opposed to 3 cents. So we'll see. But that said, Mr. Rock Lobster, we'll start with you. What are you watching for the rest of this week into the weekend, sir?
I'm just curious to see if, there's some buzz in Europe. The French might, they get the French elections, possible Brexit stuff. The market totally discounted the British actually leaving the EU. It's just a matter of time. The MPs voted overwhelmingly to bail. So I think the EU, I don't know what they're going to do with it. I think it's still a mess. As far as you somehow they have, I know everybody knows it, but I mean, they have a central bank that doesn't have an elected authority, yet somehow they have control over Europe. So I'm feeling that is that's an issue. But it also could be nothing. So I think that is, that might be the problem, but I think the market is not going to, if they want a tax plan out of the new administration, so we'll see if that happens. But other than that, earnings were good and everything looks, okay.
And Uncle Mike, same question for you, sir. What are you watching for the rest of this week into the old weekend?
I'm watching to see what matters again. Things that mattered before don't seem to matter anymore. I was talking with a client of mine today, and we were going over this, and the analogy that my client came up with is that this market's kind of like a high school girl, in that sometimes flowers matter, but then you buy her flowers. She doesn't like flowers after that, but then you don't know what she's going to like, so you buy her something else, and then she's mad that you didn't buy her flowers. Where I'm going with this is that Greece is starting to become an issue again, it seems, from some of the headlines, whereas a couple years ago that was huge, but now no one seems to care anymore. We have a lot of things going on right now that don't necessarily seem to have been fixed, but they're not being pushed or being market drivers anymore. So I'm watching to see what eventually matters and wanting to know what's going to drive the VIX back up to normal or higher levels. Because once again, I have to agree with the theme that we have pretty much throughout this week. President Trump is not a 9 VIX president.
There it is. Waiting for that music to kick in. We heard it here first, listeners. Uncle Mike, big fan of high school girls, so put that down in your resume. All right. That music means we've come to the end of yet another epic soiree through the world of options. Touched on Twitter, our old friend Activision, even good old Rock Lobster's old buddy Zinga. Heartbreaker that it is, and some other names, of course, got into Chipotle. Didn't even touch on ICE and their lack of love of options. We'll get to that a little bit later. Foot Locker. Who knows? Who knew Foot Locker and Dick's, the hot places to be? Apparently we did in the old odd block today, and then wrapped it up with some of your questions. Some of you guys still loving your longer-term options trades. Month plus, still about 60-odd% of the total vote, which is surprising. About two-thirds, a little more. Surprising how much love that is getting here for you. I thought for sure it'd be all weeklies all the time. Hey, goes to show. There's always a surprise here in store from our listeners. All right, before we go, we check back one more time with my cohorts. We'll start with Uncle Mike. Actually, we'll start with the Rock Lobster, because he probably got someone waiting to front run him. What's cooking in the land of all things option pit, sir?
We are going to have a class soon. Our boot camp is starting again, probably within a month. We are in the middle of our vol master class, which everybody's liking. All it is volatility, trading volatility, understanding vol. Nothing to do with direction of underlyings or anything. It's all vol direction based, vol products. And everybody likes it. So they want us to do more of that kind of thing. And, we're just doing our thing every day and let my clients front run me on my own ideas. So that's all right. It's a full life.
It's a full life. When are you going to do the trading longer term options webinar that people clearly need?
Actually, that is in the works for maybe, I'm going to say the third quarter.
Third quarter. Wow, you guys plan your webinars well in advance. Okay.
Well, it's
long-term options, long-term planning.
It's kind of, that would be like a 5 or 6 part course, I think.
Oh, okay. I was going to say, wow, you guys, I go a few weeks out. You guys go 6+ months out. Interesting. Well done, sir. All right, Uncle Mike. What is cooking in the realm of all things RCM Wealth Advisors?
Well, if you'd like to make a purchase of Go Long New Option Strategies for Buy and Hold Investors, go to Amazon, type in that title, type in my last name, Tosaw, T-O-S-A-W, and you will find it. It's for less than the price of a commission at most brokerage houses these days, and you can enjoy it.
There you go. Check him out. T-O-S-A-W is how you spell his last name, listeners. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, thank all of you for listening and for sending in such great questions. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.